Hello all, this is Akshay Menon representing PMS Bazaar. I would like to extend a heartfelt welcome to all the participants joining us for the episode 11 of Alternate Universe titled Managing Different Stakeholders in the Business. It's my pleasure to introduce our esteemed speaker today, Mr. Abhijit Bhave, MD and CEO of Equirus Group Wealth Management Arm, drives strategic vision with a client-centric focus. With over 25 years of experience, he has led a wealth management ventures globally, including roles at Deutsche Bank, HSBC, ICICI Bank, and Carve Private Wealth. Recently, he served as a CEO at Wisdom Private Wealth, expanding the business in emerging markets and positioning it as a trusted partner. Before Wisdom, Abhijit revitalized Carve Group's wealth management brand by launching customized solutions and digital capabilities. During his tenure at Deutsche Bank, he co-led the relaunch of Abu Bank's wealth management business in Vietnam. Abhijit holds a postgraduate diploma in marketing and finance from Indian Institute of Management, Lucknow. As a thought leader and speaker, he discusses private banking, wealth management, digital change, and wealth tech solutions at various forums. Welcome to the show, sir.
Thank you.
Next, let me introduce our esteemed moderator for today's webinar, Mr. Vikaas and Sachdeva. He's an industry star with over 3 decades of experience in asset management business. He's currently the managing director of Sundaram Alternates. Warm welcome to you, sir.
Thank you.
The next moderator of the session, Arjun Nagarajan, works at Sundaram Mutual as a chief economist and communications manager. With an initial 3 years in academics, Arjun's career in equity markets spanned over 12 years, of which he has spent over 10 years in Sundaram Mutual. Arjun was a part of Niti Aayog's discussion with economists on topical issues in the recent past. With no further delay, I would like to give the podium to Mr. Vikaas.
Thank you, Akshara. Thank you, Team TMS Bazaar. Welcome to the show, Abhijit. It's indeed a pleasure to have you here. In fact, one of the reasons why we chose a topic like this for this discussion, actually 2 reasons. One is there was a sort of demand coming in from our audience. A lot of people wrote into me, send me messages on Twitter saying that we talk about business quite a bit. We don't talk about stakeholders in a business. It's not easy running a business with so many multiple stakeholders and pressures around. Could you have somebody who can come and talk about how managing different stakeholders in a business is actually done? And I couldn't have think of anybody better than you. You've always been a friend, and I've followed you across LinkedIn, Twitter, where you have actually frequently posted your thoughts. So I thought that this would be a perfect opportunity to showcase your views, your perspective on such a significant topic. So once again, welcome to the show, Abhijit. Me and my co-host Arjun welcome you today.
Thank you so much.
Pleasure. As always, it is my pleasure to introduce the person behind the professional. By now, I think you would be aware, Abhijit, that we do a lot of research. I think I have with me a lot of people who would qualify, they can actually moonlight for a job at MI6 or RAW, the amount of research they do digging in information. But just some things about you, which your team talks about. You're a man of myriad hues. You have so many different shades to your personality. At one end, you're an omnivorous reader. You read books, any book for that matter, from Jeffrey Archer at one end to Marshall Goldsmith on the other. Notwithstanding that, you still find enough time to find solace within yourself, and you're a devotee of Sri Sri Ravi Shankar. You're very fitness conscious, and you try to clock 10,000 steps a day. I still remember last year you had put out something in which you said you're going to do 26,000 steps on 26 Jan. I hope you do it again this year. This is very inspiring, but not too many people will know about it. And what makes it even more inspiring is that just a few years ago, I think 15 odd years ago, you fought off a degenerative bone disease, and you never thought you would be able to walk with such flourish again. And I think this is primarily because of your resilient and positive attitude, which your team holds in very high esteem. I've personally seen that, when you went through COVID, you actually went through a lot of strife during COVID, and you put it out on LinkedIn. And I think it was constantly a smiling face in all those posts which you put across, which showcased your resilient and positive attitude. I think one of the reasons why you're also positive is because of your family. You're happily married, and your better half, Shweta, is a designer. Your son, Ahan, is 15, with whom you love watching Netflix together. Your family is complete, I think, with a Cocker Spaniel, who's all of 3 years old, whom all of you dote on. You're crazy about cricket, Sachin, and love traveling. I still have the book you gave me on cricket. You're an avid chess player as well. Some of your other hobbies are public speaking, motivational lectures, volunteering for the Art of Living organization, and of course, further learning and lecturing at your alma mater, IIM Lucknow. Personally, and I think I would vouch for this, what your colleagues are talking about, your biggest man management tool is sharp wit, is a very sharp sense of humor. You see the humor in almost every situation. Your colleagues call you as a people's person and vouch for your razor sharp memory. By the way, that is something which they are also worried about. You remember something which was said. They talk about a result orientation. You're extremely result focused. The fact that you're a team player, extremely organized in your approach, and you're open to accepting multiple perspectives on the same issue. You love using quirky business codes, corporate acronyms, and that is what makes you relate to audiences instantly. I'm actually hoping that you would use some of it today as well. What actually gets your goat, what you truly get irritated by, is people not being punctual and not being formally dressed for meetings. So I think this is the only thing I could get from your teams. You're usually a very smiling person, a very positive person. Thank you once again, Abhijit, for coming on the show. It's really a pleasure welcoming you here.
Thank you so much. You have given me such a huge ego boost. As they say, आपने मुझे चने के झाड़ पे चढ़ा दिया है. How I wish there are three B's in my life. Three B's. How I wish they were listening to you.
Okay.
One is Devi, my wife. Second is my beta. And third is somebody who everyone loves, my boss. If I were there, I would have got a great appraisal now.
Well, like they say,
kind words.
My pleasure. Like they say, to be or not to be, that is the biggest question. So let's just start the question. You talked about your boss, right? And I'm just taking a cue from there. Who are the main stakeholders in a business in your and just a follow-up question to that, which three stakeholders matter the most? I mean, which are the ones which are primarily important and why?
Okay. See, a stakeholder. Are you able to hear me?
Yes.
There is some disturbance, but if you Google it, a stakeholder is a person, a group, or organization with a vested interest or stake decision making and activities of a business, organization, or project. So what I've done is actually, since there was time to prepare, I have made one slide. So if you look at this, for any business, there are some direct and some indirect stakeholders. Direct, for example, is employees, but also employees' families. If I am happy with my job, I'll go home and tell my wife, I work for a fantastic organization. Similarly, we have customers, we have investors, we have shareholders, partners, but a lot of organizations also have impact on government and vice versa, and also on the community around us. So these and some more are the business stakeholders. But coming to your point, if I look at the top three, to my mind, the top three are these: customers, shareholders, and employees, and they take care of the remaining shareholders.
Interesting. So, as a follow-up question, how do you achieve a win-win with all stakeholders while making sure that everybody's beliefs align with that of the companies?
So that is the challenge, and that is the key, because out of these stakeholders, sometimes one takes priority over the other. Sometimes one is on the opposite side. For example, in wealth management, because that's the business I work in, if the employees or the RMs focus more on their revenue targets, then mis-selling will happen. I'll tell you something very interesting. I once met a customer and I told him, sir, please tell me your ideal RM. What is his top quality? And he told me my ideal RM should have zero revenue targets. So that is something, that is where you have to balance it. If shareholders want short-term profitability, again, the clients may suffer. But I'll give an example of win-win. If there are organizations like Equirus Wealth, where RMs are part owners, RMs own ESOPs, so that gives them the confidence that if I do the right job, I will get the value. And if they also get confidence from management that think long term and create a build AUMs by offering clients products which are right for them, trail bearing, even performance fee based. That's where you try to get the balance. So win-win-win is somewhere you find a mid path for all three stakeholders.
Very interesting. Very, very interesting. Arjun, over to you.
Thanks a lot, Mr. Bhave. That was wonderful. If we can just sort of stay on this topic of stakeholders just a bit more, two quick questions I had. So now, each stakeholder that you spoke about, it have very different priorities. And can you sort of elaborate on what these priorities are? And more importantly, if you can also touch upon the conflicts that you face when attempting to create a win-win for all these stakeholders, and how you sort of have tried addressing these conflicts. If you can touch upon these.
This actually is a very important question, and there are a lot of things that can be spoken about. So I took the liberty of also making a slide so that people see it pictorially and it kind of possibly adds value. Just give me a minute. So as I told you, these are the top three stakeholders, and I actually, if I take it forward further, I have put 4 E's as top priorities for customers, 2 G's for shareholders, and 3 H's for employees. So, for example, what does a customer want? The primary thing that the client in wealth management wants is returns, which we can't promise. But that is his primary objective. He or she wants great service, dependable RMs, quick and easy processes, and the right allocation as per the risk profile. They want to be sometimes also involved in the process of investing. And that's why earning is the returns, ease is the process, exposure is in terms of the asset allocation, sub-asset allocation, education is in terms of understanding, because in our business, I bought and sold my first mutual fund in 1996. And from then on, I have seen so many cases of clients buying investments which were not meant for them. And as they say in North India, कि अगर आपका एक बार मुंह गरम दूध से जल गया, तो आप छाछ भी फूक के पीते हो. So that's why people have been there, done that, they've burned their hands. So that's why they also need to understand what they're doing. So these, I believe, are the priorities. If you look at shareholders, and by shareholders, I mean promoters, private equity investors, management, 2 G's. 1 G is growth, and a fast pace of growth in terms of profitable growth. And at the same time, G for governance, which is risk management and ensuring that there is corporate governance. So I'll give an example. I used to work for Deutsche Bank. And Deutsche Bank, we used to always say that we are like a German car, a Mercedes or a BMW. They put the best brakes in the world, not to make the Mercedes go slow, but to have the Mercedes go very fast at high safety. So that is risk management. So that is what shareholders want, 2 G's. And employees want a lot of things. I can make you a list of 25, 30 things. But I think at the end of the day, happy employees are hardworking employees when the culture is that of high performance orientation and learning. So that's high performance. And third edge is humility, especially in our business. It's very easy to actually get a chip on your shoulder and get that arrogance thinking I know everything. And that's what in the beginning Vikaas mentioned about art of living and Sri Ravi Shankar. But that's what he said once, who are the great people? The great people are people who say, I don't know. There is so much more to learn. And the final point is client centricity. So that is something that one needs to ensure happens. Now, conflicts will happen. Coming to a second part of the question, as I said earlier, we need to balance out. And I think one of the most critical thing in balancing out is thinking long term, not short term. And that is where, everybody, including the client, the shareholders and the employees, for example, revenue for organization or RM targets versus clients getting the right products. That is a conflict. So if you think client, think of products as per the risk profile and as per the goals. ensuring long-term benefit for all. That is something that I said earlier also. Think of employees with ESOPs and ensuring long-term benefits. So the conflicts will come at some points of time. One of the two or three will have to be given that extra cushion to give that advantage, and that is what relationship is all about. So that is my long answer to this question.
Fair enough. It was wonderful, wonderful. Thank you. Vikaas, I think over to you for the next set.
Okay, thank you. See, one of the stakeholders you mentioned were employees. Okay, and I've often heard you talk about your belief in employees first. But do employees put the organization first? In this day and age, employees tend to move very frequently from one job to the other. It could be availability of opportunities. More often than not, monetary reasons are talked about in terms of shifting from one job to the other. I just want to take some time because this is a very important question affecting all of us, whether we are people who are recruiting or are being recruited. What are the factors, in your opinion, that an employee should look at in the workplace? And maybe as a follow-up question, what are the factors which an employer should look at beyond the obvious, things that it should match the requirements for the job? But what are the factors, soft skills or soft factors that an employer should also look in employees? I think this would be very useful for all of us.
Okay. So first, I just want to kind of digress in the beginning, and because you mentioned this, about out of the three stakeholders, this is my personal belief, and different people have different views. And I have read two books. One book is called Customer First, and another book is called Employee First. My personal belief is employees first. So I'll explain to you. If you get the right, and today there's a talent war in the market. If you get the right set of employees, RMs, with the right attitude, we train them well, we reward them well, we keep them happy, they will get the right set of customers in the right way. They will keep the clients happy. If clients are happy, clients will give investments, If clients are happy, they will get more clients. If more clients come and they transact, automatically your assets under management and the profitability will go. So it's employees first, leading to customers, leading to shareholder profit. So that is my clear thought process. Now, in terms of, today there's a lot of choice, right? There's a lot of choice for relationship managers, and these are great times. So I was thinking about this question, and, I came across a study, and I'm going to show that to you. Just give me 1 minute. This is a study done by Association of Professional Trainers in Singapore, which talks about what are the things that the employees will look for in their ideal employer. And there are a lot of things there, and point to be noted is money is number 5, because there is this wrong perception that RMs are selfish and RMs are money driven, and I don't agree with that. There are a few bad eggs in every profession, and I believe that there are a lot of RMs for whom wealth management is the passion. So one thing one needs to first look at is the work culture, the positive work culture, where people stay for a long time, enjoy their work. Transparency as an organization, empathy for employers, and that is something that is that is experienced over a period of time. No short-term hire and fire policy. I know people who recruit 50 people, sack 20 people. That's how it works. Long-term rewards and career progression. Vision. So it's mentioned on the slide, so I'm not repeating everything, but I think vision of the organization, the ambition of the organization, because wherever I have done well, reasonably well in organizations I've worked for, those are the organizations which have grown at a very rapid pace. And the last and most important point for me is the track record on integrity and corporate governance, because that is non-negotiable. 1 minute, your entire hard work of 20, 30 years will disappear if something wrong is done. So this is the list as per the study. But for me, it is about the work culture. For me, it is about transparency, empathy. It's about your peers. It's about obviously rewards, the number 5 point, but more in terms of career progression, the vision of the organization, and corporate governance. How do you find this out? You talk to past employees, you talk to AMCs, people from AMCs know everything. Talk to clients and check on the social media. You see, you also check on Glassdoor, for example. Now, if you're the reverse part in terms of what the employer will look for. So I'll tell you, I come from a background where I believe that inborn knowledge, talent, and everything is something that people believe comes at a cost, and you have to really kind of invest for that and get people with a lot of long experience. I believe that it can be trained. So, if you look at 5 pillars, CASH-B, KASHB. K for knowledge, A for attitude, S for skills, H for habits, and B for behavior. So these are typically, besides knowledge, these are soft skills. For me, knowledge is important, but that is not the only thing. For me, experience is also important because, white hair and lack of hair, as you can see on my above my face, does give you that that edge. But people can be groomed, people can be trained. In one of my earlier organizations, we had actually taken 30 management trainees and we trained them. We invested our time, money, and efforts in them. So, it sounds like a hackneyed answer, but attitude is something I would look at rather than the knowledge or the past track record.
Interesting. So attitude over talent any day.
Yeah,
I think
absolutely.
In fact, it also reminds me, I was speaking to somebody in the industry, and a very interesting point came about, which I thought is worth sharing here. The key tenet for growing in any industry is that you have to be an HR person. So HR is not the domain of just the HR team. Okay, we all have to be HR professionals first. And I think you are just beautifully giving it acronyms all over. You're giving the output thing, but at the core, if I'm able to distill and put it across, it's that everybody has to be an HR oriented person to start with. Otherwise it doesn't work in this day and age of social media and a lot of impersonalization. HR really gives you that empathy. So thank you so much
just
for
wanted
that.
to add something. I just remembered something since you mentioned talent versus attitude. Is also about discipline. So I used to play cricket in my school days. I used to go to a club called MIG Club and play there. And once my claim to fame, I have played one chota match with Mr. Sachin Tendulkar. And that's the example people give, right? SRT versus Vinod Kamli.
Absolutely.
It is humility and the discipline of. So I think that's also important. Sharpen the axe. You saying that I know everything, or you saying, boss, there's so much more to learn. I think that is what is important.
Very interesting. In fact, Vikaas Sidania probably asked a question around the same time about employee first versus customer first. Are these conflicting strategies and how do we balance? I think you did answer about employee first, and then that is how it leads to customer first. Would you like to add something to this, or should we just move on?
So on customer, I'll add something. Let me in wealth management. Okay, in wealth management, one should try, and this is where effectively it becomes employee first, but for the employee's customer first. So if I may just elaborate this, I have always said that in wealth management, the relationship manager should take a helicopter view. And this is what I had done in my past organizations also. We tell ourselves that it is our mission in wealth management to help our clients achieve their dreams and goals, which means that we visualize ourselves as not just a friend, philosopher, guide, but also as a coach, for example, a gym trainer, a bade bhaiya, somebody who holds the customer's hands and walks with him or her in this path of life, while crossing the various milestones. There is this very nice book and concept which I firmly believe in by Simon Sinek. It's called Start with Why. So if you want to a good RM, and that is what I'm saying, first get a good RM, automatically other things fall in place. He has to understand, or she has to understand, why is the client investing? Put yourself in the client's shoes, do as much research as you can about the client and ask them questions. And finally, this is my litmus test. do not sell anything to a client which you will not buy for yourself or for your near and dear ones. So from that perspective, client first in the mind of the RM, and obviously the entire client experience is something that the organization works on.
Beautiful. In fact, I also wanted to ask you if you would want to give a message, to people who are, looking out for jobs at this point of time. What would you, as an employer,
Huh.
look out for when you're hiring people?
So I tell you what I tell our employees, okay? Because this is something this line I have been using for the last 3 years since our Prime Minister used that line in one of his Republic Day speeches, but he also repeated this line in the Ram Janmabhoomi ceremony. And this line is from a Tamil poet's poem, and it says, "Yahi samay hai, sahi samay hai." This is the time, this is the right time, this is the time for wealth management. There was this very old movie of Akshay Kumar and Sunil Shetty called Waqt Hamara Hai. And if you're talking of movies, if you look at, no, I don't know whether you've seen RRR, but if I put that in our context, we are first R, we are in the right country. Second R is we are in the right industry, wealth management. And third R is hopefully we are in the right organization. So in fact, I will tell you that there are possibly 4 questions that a person should ask about his existing employer or his prospective employer. And the first question would be, am I really enjoying my work? In the morning when I get out of my bed, do I say carpe diem? Carpe diem means seize the moment. And am I proud of working for, say, Equirus? If I'm proud of working for Equirus Wealth, it will come in my body language, it will come in front of my customers, it will come in front of my family. And that is a straight sign that is a great organization to work for. Second is, how are the people around you? Are they inspiring you? Are they better than you? We say that you and I are an average of 5 people that we spend our time with. So these 5 people better inspire us and not take us down by gossiping and giving us negative inputs. And third and fourth question is, am I getting enough for myself? And that can be rewards, career progression, positive strokes, learning, training programs. And am I adding enough value to myself? So getting value, adding value. So these 4 questions, if you ask, you will know you're in the right place or not.
Amazing. You did mention that this is one of the stakeholders which should come first, and thanks for spending so much of time on that. But like you said, you spend time with the 5 closest people to you and you become like them. Already in the last 5 minutes have started becoming like you. So I also have an acronym for you.
Okay.
That if I have to look out for an employee, there are 3 E's I will look at.
Okay.
Energy, enthusiasm, and entrepreneurship.
So this is actually, so let me tell you, it reminds me of a book by Jack Welch.
Okay.
It's called Winning. And he has defined 4 E's. It's something very similar that you have defined.
So and 75% of Jack Welch already. Is that what you're saying? I'll
Absolutely.
take that.
So people in the audience who take interviews, he says, I look at 4 E's in any employee who comes for an interview. Okay. First E is energy. Second E is energize, ability to energize. Third E is execution. And fourth E is the edge, the X factor. So I love that. That is something that I look for in people.
Super. I think Arjun has been on a leash wanting to ask some question. Arjun, over to you.
Yeah, sure. Thanks a lot, Vikaas. I think you preempted the question that I wanted to ask him about customer first. So I think you've answered that, Mr. Bhave. I'll ask you a couple more. So what I can understand is you said do to your clients what you do actually to yourself. So trust seems to be something that really stands out. The integrity and trust really seems to be two things that really stands out from what you said. And from an acronym point of view, after Modi, I think you're the only other person that I've actually heard so many acronyms in such a short span of time. You're like the Desi Philip Kotler in a certain sense. So one question here. So from a stakeholder point of view, so to manage different stakeholders smoothly in various organizations, what would you think would be the most important thing to do? The best way to keep everybody happy? It's very difficult to keep everybody happy, but what would you actually say on that? With some examples, if you can.
Okay. So, no, I have been very, very lucky in my life on two counts. One is for the last 25, 30 years, I've been only meeting a lot of rich people. I also worked overseas for a brief period, and they teach you a lot. And at the same time, I've worked in different kinds of organizations. I have worked in public sector organizations. I have worked in a listed private sector company. So I've worked in Unit Trust of India, Bharat Petroleum. I've worked in ICICI Bank. I've worked in two of the world's best and biggest banks, HSBC and Deutsche Bank. And then I've worked in three organizations which were promoter driven, which had their own, including a startup funded by a private equity venture capital fund, a very old organization, and a relatively new organization. So, I have also failed. And that's one other thing Vikaas, I will tell you about. I call it the F word, which is failure. So I have failed a lot, and that's why I have learned a lot. So I don't know, people may not know this, they may not be of that generation, but there was this very nice, popular Shah Rukh Khan movie called Bazigar. And in that, there was a dialogue that Zindagi mein kuch paane ke liye kuch khona padta hai. So I'll slightly modify that. I'll say Zindagi mein पाने के लिए कुछ देना पड़ता है. And that is how you make a relationship successful. And that relationship, even in the stakeholders, for example, we can have another simile. You can say that these are my parents and this is my spouse and this is me. And you have to have a win-win across in the family also, right? Similarly, you talk to any stakeholder, normally, I don't know how many times you, Arjun or Vikaas, you heard this from an employee saying, organization mere liye kya kar raha hai? Have you heard this line? So, this is a standard line that all three stakeholders ask to other person. What needs to be asked is, to build a successful relationship. And I think I think this line also came from Dale Carnegie's book, How to Win Friends and Influence People. You have to first, suppose I want to have a relationship with you, Arjun, I'll have to think, what is Arjun's goal? And I ask Arjun, what can I do? How can I help you achieve your goal? And if I help you in that, possibly you will think, okay, let me also help him. And that's how you do that relationship. You ask him the goals, and it's about I scratch your back, you scratch mine, but I scratch first. And that is something, if stakeholders behave like that, automatically everything falls in place and there's a win-win-win.
Oh, fair enough. That really sounds very, very good. So in this entire framework that you were talking about, so can I then say that the system plays a fairly important role? Because across the organizations that you were talking about, they're very, very different organizations. One is an MNC, one is a promoter driven. So in all of these, if there's a commonality there, do you really feel that system is of utmost importance, a system that sort of reads the employee?
No, I have a different view. My view is, whatever be the system, it is the person who will be responsible. Within the same system, different people fail and different people succeed. I just remembered something. A very great guy. He was the founder chairman of Axis Bank. He was my super boss in UTI, Dr. PJ Nayak. And once I had actually walked up to him, I was in a bad mood, one of those disgruntled employees. I told him, boss, I am very, very demotivated. And our HR team, and I hope there are not many HR people here, but I said, our HR team is neither reactive nor proactive. Main kya karu? So he said, nobody in this world other than your parents are interested in motivating you. So you better learn that fast. And, motivation, as per Shiv Khera, is motive for action. So once you have motive, action happens. So you have to motivate yourself. Then he told me something very interesting, and that is something that can answer the question. He said, in your life, learn to do one thing. Learn to look at yourself as a solar system where you are the sun. And now it is an art. It is up to you to make other stakeholders revolve around you as your planets. And that is something, that's why I'm saying it's not the system. It is the individual, how he reacts and what are the things that he or she does to make the system work for him.
Wonderful. Your examples is just brilliant. It's like throw you a curve ball and you just hit it for a 4.
Oh, thank you so much.
Thank you.
Also, don't miss out on his razor sharp memory. He talked about his super boss. I'm struggling to remember who my first super boss was in the first place. And he remembers the quote from his first super boss. Uh, there are some questions coming in simultaneously. I'm just saying Aksharaj Sarvanan talked about how to handle conflicts between different stakeholders in a business. I think that's something which Abhijit has already talked about. There are some very, very interesting questions coming in, and I think we'll come to them very soon. Uh, you keep talking about the four E's, okay, in all your conversations. Is what you just talked about, Jack Welch, the four E's which you talked about, or are these a separate set of four E's? Because you keep talking, I don't really recollect, and I think whenever I've heard you talk about them, the feeling of being very involved and very attentive and feeling very nice was there. So if it's a different set of four E's,
Okay.
would you like to share it with the audience?
No, it is actually here. I had shown this here. These are the
Okay.
four E's. When you
Okay.
talk of a
Client
customer experience, you
Yeah,
talk of this. Sorry, you talk of earnings, the
Correct.
return the customer is getting. Ease
Correct.
is the process, the speed, exposure. Exposure. In fact, I will talk about in not just asset allocation. One more, and there's something I heard 28 years back in Unit Trust of India, which was the largest mutual fund at that time and had 60,000 crores of assets under management. And they had this newspaper ad saying SLR and more. S for safety, L for liquidity, R for returns. The higher return you want, you have to compromise on safety or liquidity or both. And that's why the exposure on time periods, time horizons, and the exposure on the risk. And fourth is education. So I will also tell you this, I think it's extremely important to keep things simple. Some in our business, we possibly make money by complicating things. But if you keep it simple, there are even today in client meetings and ultra HNI client meetings, I take a pen and paper and I write and draw. And clients appreciate that. So I think simplicity is important. And that's where those four E's also came in. And the point is that people tend to remember when you create these kind of frameworks. I think that's the reason I use it. Our Prime Minister is obviously a great expert in that. And he makes people remember those
acronyms and all
that he does. Yeah.
Okay. Steve, one of the things which you talked about good employees, you also talked in some parts about good leadership. Okay. And I'd like you to elaborate that a bit more. And, H. Devnath has asked a question, which I think blends in. If you could also give an example of any organization in the wealth management space that has been able to resolve the conflicts mentioned by you through sheer leadership prowess.
There are actually many of them.
Okay,
so I can't take one name. Any organization who does not focus on customers' interest will not survive and prosper. And any organization which does not take care of employees will not survive and prosper. There are a lot of organizations in wealth management which have come suddenly, grown fast, made a lot of noise, and have come down. And others have been there, which we call lambe race ka ghoda. So to my mind, so I don't want to take names actually, because if I take a few names, a few other names will be missed out. But all the organizations who are maybe having assets under management of more than $1 billion and who have been there for some time, I think they have managed to balance all three. And I have also seen, unfortunately, and clients have told me about organizations which are not doing the right things. But once a customer, there is this statistic that, I think out of every 5 happy clients, 1 refers a customer. But out of every 5 unhappy clients, 4 just walk away. They don't even complain. And then, when I used to work for HSBC, we used to talk about customer delight. And beyond that, we should talk about creating our clients, our fans. So anybody who has been there for years and has been, I'm just giving a number, crossed $1 billion in assets under management, I think is doing a good job of balancing all stakeholders.
Very interesting that you mentioned that, and I can just talk to you about the Sundaram approach. I think one of the key things when we enter the business, I'm all of 14 months in the business. But Sundaram has been an entity across financial services for tons of years. And I think the average employee longevity is quite high. One of the
Yeah.
first things we learn when we get into this company, before anything else, is our founder making a statement that always remember that the customer is paying your salary.
Yeah.
And I think that just keeps everybody grounded. That's a wonderful perspective. Intuitively, we all know that. I don't think there's any dispute in that. But at some stage, we tend to view things very, very differently from what we think is right to what the customer thinks is right. So the moment you say the customer pays your salary, I think all your values start falling in place.
Yeah.
So thank you so much for sharing that. I think, Abhijit, if it's okay with you, we should now shift a bit to market related questions because I'm getting a lot of questions coming on the markets. We have another
Okay.
10-15 minutes. Arjun, if you can ask some questions and then I'll go to the audience questions.
Sure. So I think the elephant in the room again, your opinion on the outcome of the general elections and what sectors, in a sense, do you think will get a boost and continue to do well?
So at least on the elections, I'll tell something. Again, I'll use an acronym. Okay, to keep it simple. 3 E's now. But these are three different E's. This is something that as an investor, I would look at. And as a wealth manager, I would ask investors to look at. And first E is economy. So, we remain the fastest growing economy in the world. Today's Mint has given that among all the, I think, top economies, we are number one on all parameters for the last 10 months. But, broadly speaking, at Equirus Wealth, our research, we believe that where China was in 2008, and the growth that China saw over the next 20 years, India is there now. Bharat is there now. And the next 20 years as an economy, we will do exceedingly well. So that is the first E. So that is a quick tick. Second E is where you select your investment. So whether you select a sector or you do a bottom-up stock picking. And as that second E is earning. And as Warren Buffett always says that the price is a slave of earnings. So the consensus estimate for Nifty earnings for the next 3 years is 12%, but a lot of companies will do better than that. So that is the second E. And third E, which you spoke about, is nothing but event. So election is an event. And, some other events are also happening. Geopolitical events are happening. And, suddenly a black swan event can happen like a COVID or touch wood, it will not happen. But election is one of them. So election will have a sudden impact, positive, negative. But again, it will go back to the first two E's because they are fundamental and long term. Whereas the event like election is short term. But having said that, the expectations are that we'll have a stable government and we'll have consistency of policy making. For us this year as a strategy, so obviously one looks at the asset allocation. We are positive on equity. We believe that equity, though it may not do as well as last year, it will continue doing well. We are overweight large caps. So if somebody is in mid caps, we are suggesting that, I do three things. Either you book profits, sit in liquid, or you book profits or you sell some and move to debt or a balance advantage or a multi-asset allocation fund, or you move from mid cap to large cap. In terms of sectors, in terms of so in Equirus, we have an institutional equity research arm which does a fundamental research of 250 stocks. And we do give this research to all large mutual funds and PMS houses, insurance companies. So those sectors which we believe will do more than 12% growth in earnings would be typically consumer discretionary, auto, logistics, and specifically two calls we have is large cap banks and large cap IT companies. So that is something that we are looking for. But these are short-term kind of things in a long-term investment. Important thing is keep your equity, buy it, hold it, maintain your allocation within that equity, and then let the money work for you.
Fair enough. So I'm assuming that you also subscribe to this decadal India growth story that it is India for the next 20-30 years going forward. So,
absolutely. These are going to be the best 10 years of our lives.
Wonderful, wonderful. So, from a point of view of an investor, from a young investor, so one thing that we've actually noticed over the last 10 years, now, around 6, 7 years, is every market correction, there seems to be an increasing amount of investor maturity. In the sense, you no longer really see a panic sellout. People, all retail investors seem to be using the opportunity to sort of add on to their investments and cost average. So, from a point of view of a young investor, what would your advice be to young investors of today? How would you advise them to look at markets? Let's say an investor who's 20 years old, 25 years old. How would you advise him?
So, I am a great believer in this line that a good reader is a good leader. So, and I'll give you an example. My son is 15, and I actually incentivized, as I said, motivation. I gave him a motive for action. I incentivized him to read Rich Dad Poor Dad, and now he's reading Psychology of Money. So, no, I don't want to give you the advice that everybody gives. Start early, investing, and keep investing for a long time. Read these two books. And I think Rich Dad Poor Dad tells you how to become rich and remain rich. And it talks of, you must have heard of Gini coefficient, about the divide between the haves and the have-nots. The book clearly says that rich are getting richer, and why that is happening. And Psychology of Money, we all, though we say that past performance is no indicator of future returns, every single investor presentation has a deck of last 20 years, 30 years, 100 years, and they have backtesting. So this book, Psychology of Money, says history does not repeat. So, this is what I would say, that start by doing that. I would say very clearly, buy more equity, less debt, invest more in equity, less in debt, let it grow, be patient, educate yourself, study markets, listen to market gurus like Vikaas, Sachdeva, listen to what they say. Sunil Subramaniam keeps on talking so many good things. But two things I'll say, one is set clear goals. Don't just live for the day. Set clear goals. And I think today's young Indians are really ambitious. And while they look at work-life balance and they look at spending money, they are also sometimes really focused. And the other thing I will say is, don't deprive yourself. Please spend, but spend selectively. This is my wife's mantra in shopping. She says, "Kam lo par acha lo." So I'll say spend selectively. Come, spend karo, but buy good things. But otherwise, the standard thing always works. You study, you actually go and do that risk investing, make that mistake, learn from it. But, don't fall in the trap of where you spend too much and you don't have anything left. So start early is surely the case, but I believe one should also work harder and earn more and not just focus on investments. Enjoy life, earn more, invest more.
Fair enough. It's wonderful. I'm actually taking a couple of notes. One on what you said on motivation. It was just wonderful. Such a hard-hitting sentence that only your parents really will motivate you in life. That's really so true.
Yeah.
I'm sure most of us who are parents are going to paraphrase that statement and go and tell it to our kids in any case.
I'm going to, for sure.
So I think we can move on to audience questions. And I think Sabri Ganesh, you put your hand up. I think the only way you can communicate here is through a question through the chat box. I'll be obliged if you could do that. But before I go on to the questions, just to add one more line to what we talked about, advice to youngsters, Abhijit. I believe that you need to spend as a youngster. This stage of life comes only once, with guardrails, of course. Don't go overboard.
Yeah.
Because अगर आदमी खर्चेगा नहीं तो उसको कमाने की अक्कल नहीं आएगी. If you don't spend, you will never realize the value of earning. And I think these are real life lessons. I'll just go to the questions. Some very interesting questions have come.
Yes,
And if you are it's completely your call whether you want to answer a question or not, because some of them are brilliant questions. One of the questions I thought I'll just ask you, it's about the Sony and Z merger deal falling through.
Yeah.
Okay. I'm not able to understand what Bhavdharni is trying to ask, but let me see if I can glean a question out of that. She's asking what's the best resolution strategy in case of a conflict Recently, this merger deal has fallen through. What's the best strategy for resolution? Can the regulator or any third party help investors? Okay. So if you are a third party, okay, and you are basically a friend of two, let's not talk about Sony and Z, let's talk
Yeah,
about
yeah.
two party X and party Y, and you are sitting there. They both have stakes in your business, not maybe not financially, but emotionally. You are probably on the board of both the businesses. I'm just trying to paraphrase the situation. And you know that this deal could be good for both of them. Again, I'm not referring to the Z Sony deal. I'm just generally making a statement. When there are two parties who refuse to come to talk to each other, or they're not talking to each other, and you are somebody who understands that a solution is beneficial, what would cross your mind to bring them closer to a solution? What would be a couple of things which you would do to get these two stakeholders to a solution?
So, I will actually give you a philosophical answer because, human mind is as simple as it can be or as complicated. Human beings are like that. So, one is that, as they say, Miya Bibi Razi to kya karega Ghazi. Similarly, if somebody has decided to break, outsiders, even if you talk sense, it is not going to work. So, in any conflict, and there's some other question on that, when it is involving people, I would follow the age-old Chanakya Niti, which is Sam, Dam, Danda, Bhed. You first talk it out and give logic. If that doesn't work, you incentivize and say that, this is the kind of reward you get. If that doesn't work, be a strict teacher, and say, boss, give that whatever firing. And if it doesn't work, just leave it, move on. Life is short and there are too many things happening around. And in this particular case, I think they have crossed that level of coming back. But that's my view. These are, in Punjabi, they say, vadde vadde log, vaddi vaddi baatein. So these are big people having big talks. I'm a very small human being. So there's nothing I can say on that. But I think it's important. I also saw one more question. If you don't mind, I'll look at that. About company handling attrition rate. And
I was about to ask you that. Akshara Sarvanan. Yes, please.
Yeah. So these are one of the many problems. So I am the CEO of this company, and this is my third role as CEO. For the last 10 years, I think 9 years, I've been CEO. And attrition rate is one problem. And the same thing, what we discuss about Z merger, it's about, people don't leave jobs because there's a great job outside. People leave jobs because they are not happy where they are. And that is a part of the culture, that's the part of the boss. And obviously, it is easy to retain talent, then train and get new ones. But that is the challenge. So you obviously try to create that culture. Moonlighting also happens in wealth management, by the way. There are people who are employees of a wealth management firm, and then they also have a IFA code in their wife's or brother's name. That's also moonlighting in a way. So obviously that is not acceptable. See, in wealth management, it's based on trust. We are managing people's money and it's non-negotiable. One break happens, it is a sackable offense. So that is something which is non-negotiable. I just want to show you something. I just had I don't know why, but I got this with me because what are the things that I do as a CEO to what I need to do in office? I just made another full form. CEO does not just stand for Chief Executive Officer, but also Chief Entertainment Officer, Chief Energy Officer, Chief Empathy Officer, Chief Education Officer, and the balance part, Chief Equilibrium Officer. And recently I've realized it also stands for the Chief Ego Officer. So a lot of things one needs to do. There are a lot of problems, but that's the reason you get paid to solve those problems. But some problems are not worth solving. I think you just move on.
Wonderful. There are some questions which are coming on PMS. 50 lakhs is the minimum in PMS. And I think you could always connect with Equirus Wealth for them to suggest to you, what could be the right avenue. You can, Abhijit, I hope you don't mind if somebody writes into you asking for advice for investing PMS.
Yeah. Abhijit.Bhave at equiruswealth.com.
So you could write into, thank you so much.
Or on LinkedIn.
Perfect. And then two questions. One is from Sharma again. The new generation investors value low pricing only. They don't see another value than low price. How to manage this new generation? I think he's talking about investors getting into penny stocks. That's my interpretation. This is a market-related question. What is your advice for people who keep thinking that just because the price of a stock is low, they can make more money out of it? What would be your advice on that?
So when one is starting investing, and I bought my first share again in 1996, and I've also made a lot of mistakes. But actually, the first share that I bought was Reliance Industries, and if I had just held on to it, I would have retired many years back and simply given $1 million to Vikaas to manage. But I think when you start, start with large companies, and even if you have, I'm not saying go and buy MRF at 1 lakh, whatever the prices, but start with a few nifty companies who are fundamentally doing well. Asian Paints, for example, has been the most expensive stock for so many years.
Yes.
It still keeps on going up. So it's not about low pricing, it's about a lot of other things. So, penny stocks one should definitely avoid in the initial part of one's investment career. But I also say something completely opposite. Wherever you have seen these big bulls making money, they have made money through multi-baggers. So once you have a reasonable experience and a reasonable amount of investment corpus, I think one should go 10%, but not in a penny stock, low priced, well-researched stock. I'll tell you why I'm saying this. At Equirus, we have a small cap PMS, which is a 1,000 crore PMS for the last 5 years. And you can just Google it. It also came in the papers 2 days back. It is the best performing PMS, top PMS in the last 5 years. And what we have done is identified smaller cap companies, bought them when nobody had heard of them, and just stayed on that. And it has gone up 30x, 40x, 50x kind of things. So that is something I would encourage now people to look at. Don't do it because, on Money Control forum, somebody is saying, this is going to be this and that. Do some research, and maybe 10%, it's worth doing it. It'll just make your life possible. So slightly ulta answer. I don't think
I think
some people will agree with this answer.
If I can probably distill your answer in a different way, if you do want to go in for penny stocks, you have to, or low price stocks, you have to just make sure you have a lot of research around you, like what Equirus has. And if you don't, best avoid it, go to large caps or go to a mutual fund. I think that is something which will really help you. The last question, which I think in the interest of time, this is from Navneet Ajmera. What has been your biggest people related challenge and how did you resolve?
There have been too many. So, and I'll answer the question. But, if I'm just assuming this person is, say, working for a job, what happens is that individually, when you're working for, say, I'm just 21 years, you're going to have 7 years, which are going to be fantastic. Everything falls in place. You have the best boss in the world. Markets are helping you. 7 years are very average and 7 years are pathetic. And you do really badly. So, these are not then challenges outside you. These are challenges within you. So what I would say is it's not about any challenge or situation. It is me. So I have been my biggest hurdle and I have been my biggest critic and I have been the person who has kind of fought back and come back. Sorry for being immodest, but somebody used this line and, I'm just saying this, डर के आगे Abhijit hai.
Abhijit, okay. That's a good point.
So be fearless. That's what I'll say.
Okay.
But I think you are your biggest hurdle in life. There's nothing else that is not solvable. I think you be fearless, and like Radhika's book says, it's limitless. Life is limitless.
In fact, if I were to be asked this question, I would say that the biggest one is yet to come. Okay, because every time I handle something, I think that nothing can be bigger than this, and then something else comes up. We live in a very dynamic situation, and I think, like what Abhijit said, you need to just be very focused, very positive, and if you're very empathetic to the situation, you can't go wrong.
In fact, if you get a chance, read this book called Grit. It's a very nice book. It's because that's what it's all about. In life, you're going to have issues. You're going to face shit, and you have to fight back. You have to show that resilience and grit.
No, in fact, that's the cue for my my closing comment. We are giving a prize away for the best question, and we will give this book away. Grit. with the best question.
Okay.
Okay, and if you think it is perfect, if you think it is doable, we should give Akshay Raj Saravanan the prize when he's talking about handling attrition rate and how to hire and train new employees. Would you be okay with that? Is it okay
Absolutely.
with you? Okay. Thank you
Absolutely.
so much. I think Aksharaj, please do send us your coordinates, and you're going to be the proud recipient of this book, which is personally recommended by Mr. Abhijit Bhave. Abhijit, it has been such a wonderful experience. I was a little worried uh, how people would react, accept to a topic which is not conventional. Market क्या लगता है ऊपर जाएगा गोल्ड उठाने का स्टॉक लेने का but you've kept the entire audience enthralled.
Yeah.
And I think like what I was introducing you when I was introducing you earlier, I said you have this knack of keeping the audience engaged through acronyms and through examples. I, for one, like Arjun, have been making a lot of notes here. So on behalf of all of us, I would like to thank you for this wonderful, wonderful masterclass. And I hope it has been beneficial for everybody who listened in. Thank you so much.